Hello everyone. The ECB once again refrained from taking an action, but ECB President Draghi intensified the bank's dovish message. Quantitative easing had been only a theoretical possibility before, but he said that the ECB Council is now, quote, unanimous in also using unconventional measures, unquote, if inflation expectations fall further. The big difference on the Council centers on the question of why the inflation rate has been falling. Some members see deflationary pressures intensifying, while others believe that lower food and oil prices, plus the shifting of this year's Easter holiday into April, are behind the downtrend. This means that if inflation doesn't start to rise again in April and May, the Council would probably change its view and take further easing measures. Thus, the next few months of data are going to be decisive for the euro. The ECB also emphasized the importance of the exchange rate, noting in the prepared statement that, quote, exchange rate developments will be monitored closely. This probably caps the upside for eurodollar. That's not a concern for me at the present time, however. On the contrary, eurodollar seems poised both fundamentally and technically to decline from here, as it should move to discount the increased possibility of further easing. The main event today is, of course, the release of the non-farm payrolls for March. The market consensus is for 200,000, up from 175,000 in February. Another solid number like that would reassure the market that the slowdown in hiring in recent months was indeed just because of the bad weather, and that the U.S. economy is healthy. That would probably send U.S. interest rates higher and reinforce the perceived divergence with Eurozone monetary policy, and therefore send the dollar higher, in my view. The one standard deviation range on the forecast is about 175,000 to 225,000, so anything over that's likely to cause a fairly good dollar rally. Our research shows that the yen and the Canadian dollar have the greatest increase in volatility on payroll days. Eurodollar has a distinctive pattern. It gets much more volatile on positive surprises, but it seems to have a regular day on negative surprises, which might make it a good option for people who want to position themselves just for a higher non-farm payroll figure. The yen, on the other hand, is more volatile on both beats and misses. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Global Head of FX Strategy at IronFX Global, wishing you solid trading.